In this video, we will show you and John 6 robust Vanguard ETFs that can help you weather the storm of a downturn. These ETFs offer a path to a more secure financial future, often outperforming the market, especially during times of potential market turbulence. We'll show you ETFs that can provide both capital appreciation and dividend-earning potential. In the end, we'll show you an ETF that has the potential to grow your investment to over $20 million while paying monthly dividends that far exceed the annual income of most professions. Let's get right into it. These ETFs are arranged based on their potential to grow $10,000 into the highest returns over the long term. Starting at number 6, we have Vanguard Growth ETF. Known by the ticker symbol VOOG, this ETF is John's first pick of the year. With a current dividend yield of 0.6%, this might not look attractive, but for the long term, you have to consider multiple key factors. First, there's the current dividend yield, which in VOOG's case is 0.59%. Next, you should consider how much this dividend has increased every year. In the case of this ETF, it has a 10-year CAGR of 3.46%. Additionally, you should look at how much its value has increased over the years, which can be determined from its past performance over the last 10 years. In the case of VOOG, its share price has increased by an average of 13.56% every year over the last decade. Taking all of that into account, if John invests $10,000 in this ETF, after 1 year, it'll be valued at $11,415, which will include $59 of dividends and a total capital appreciation of $1,415 in 1 year. But the real return starts when he reinvests those dividends and lets his capital grow. The same investment in 5 years will be worth $19,433, paying an annual dividend of $119. Now, the total gain on the investment, capital appreciation, stands at $9,433. After 10 years, his investment, with reinvestment, will be valued at $37,973. In 20 years, that figure will be $147,933. And in 30 years, the investment will be worth $597,288, paying an annual dividend of $8,541, or roughly $711 per month. Now, you may question how $10,000 is turned into over $500,000, but it's not only the initial $10,000 investment. Remember, John also reinvested his dividends for 30 years, which in the case of this ETF, if you add them all up, amounts to $53,391 of reinvested dividends and the initial $10,000 investment. These two figures then combine and grow to over $500,000 in total value. This ETF has been around for nearly 20 years and manages over $88 billion in assets under management. It's designed to invest in big American companies that are expected to grow a lot. What's interesting is that it tries to avoid buying all the stocks at once to prevent prices from jumping around. It also has a super low fee of 0.04%, and you can easily buy and sell it because of the high demand and supply. It has a lot of its money in tech companies, and the top 2 holdings are Apple and Microsoft, which together make up a big part of the ETF. VOOG is a good choice if you believe in the growth of big American companies, especially in tech. Next on the list is Vanguard Mega Cap Growth ETF. Known by the ticker symbol MGK, this ETF currently offers a dividend yield of 0.52% with a 10-year annual dividend growth rate of 2.07%. However, this ETF has enjoyed an average annual return of 14.41% every year for the last 10 years. So it's safe to say this ETF primarily focuses on capital appreciation rather than generating income. Based on these parameters, if John invests $10,000 in this ETF, after 5 years, his initial investment will be valued at $20,080, or $10,080 in capital appreciation. In 10 years, the same investment will be valued at $40,431. Fast forward to 20 years, the investment with reinvested dividends and capital appreciation will grow to $165,385. In 30 years, that value will be at $686,189 and pay an annual dividend of $5,740. The dividend isn't much, but as we said, the fund is more focused on capital appreciation rather than dividends. So, how does this ETF work? MGK employs a straightforward yet effective strategy of investing in the largest growth stocks in the market. These mega-cap companies have already proven exceptionally strong and have maintained their leadership positions for an extended period. The ETF aims to track the performance of the CRSP US Mega Cap Growth Index, providing investors with a convenient way to diversify their exposure to these top-tier growth stocks. MGK's portfolio consists of 98 holdings, with the top 10 holdings accounting for 60.9% of the fund's assets. Notably, Apple and Microsoft lead the way, making up a significant portion of the fund. While technology stocks dominate the portfolio, it also includes holdings in other industries, such as pharmaceuticals and payment networks. Next, at number 4, we have Vanguard Russell 1000 Growth ETF. Known by the ticker symbol VONG, this ETF has a current dividend yield of 0.76%, which grows with a decent 10-year CAGR of 5.67%. This ETF, like most, prioritizes long-term growth through stock appreciation, which can be seen from its consistent annual stock appreciation rate of 14.37%. Based on this, if John invests $10,000 in this ETF, after 5 years, his investment will be valued at $20,343. That's doubling the initial investment in just 5 years. And it gets better from here. In the 10-year mark, John's reinvested investment, backed by dividend rate, dividend growth rate, and average annual returns, will grow to $41,918. In 20 years, it'll be positioned to reach $187,911. And after 30 years, the total value is forecasted to grow to $945,695, paying an annual dividend of $32,286, or roughly $2,690 each month. To transform a $10,000 initial investment into an investment valued at $945,695, John relied on reinvesting $165,261 of dividends in the ETF. Over 30 years, the initial investment and the reinvestment dividend combined to grow an annual average return of 14.37% to reach $945,695. VONG is known for being inexpensive to own, costing just 0.08% in fees. It has a history of performing well, often outperforming the S&P 500 index. This is because VONG mainly invests in growth stocks, which tend to do well when the stock market is doing well. VONG owns a mix of 443 different stocks, and they're the kinds of stocks that have been growing their earnings by an average of 23% every year. The biggest chunk of the ETF's money is in tech companies, especially Apple and Microsoft. This year, too, the ETF has been doing really well, going up by 26%. This might be surprising because people thought that these types of stocks might not do so well when interest rates are going up. But they've been doing great, partly because people are willing to pay more for them. And the best thing? The ETF has a good read of the market again. Next, at number 3, we have Vanguard Mega Cap ETF. Known by the ticker symbol MGC, this ETF is one of John's favorite picks of the year. With a current dividend yield of 1.45%, this might not look attractive, but for the long term, this ETF grows dividends at a 10-year CAGR rate of 6.43%. And it's also backed by a solid average year yield of 12.26%. Taking all of that into account, if John invests $10,000 in this ETF, after 1 year, it'll be valued at $11,372, which will include $145 of dividends and $1,227 of capital appreciation. But the real return starts when he reinvests those dividends and lets his capital grow. The same investment in 5 years will be worth $19,256, paying an annual dividend of $337. Now, the total gain on the investment, capital appreciation, stands at $9,256. After 10 years, his investment with reinvestment will be valued at $38,177. In 20 years, that figure will be $170,935. And in 30 years, the investment will be worth $1,027,685, paying an annual dividend of $82,460, or roughly $6,872 per month. This is our first pick, which has the potential to turn $10,000 into over $1 million. And you may question how this is even possible, but remember, it's not just the initial $10,000 investment. John also reinvested his dividends for 30 years, which, if you add them all up, amounts to $381,202 of reinvested dividends, along with the initial $10,000 investment. These two figures then combine and grow to over $1 million in total value, which pays $82,460 in annual dividends. Now the question is, what is this ETF's strategy? MGC focuses on large companies in the U.S. These are businesses worth more than $10 billion, and they tend to be steady and not too risky. The ETF mostly invests in information technology companies like Apple and Microsoft. That's about 28% of the pie. Healthcare and financials are also in there. In total, the top 10 companies make up almost 30% of what MGC holds. Vanguard Mega Cap ETF carries a Zacks ETF rank of 3, Hold, which is based on expected asset class return, expense ratio, and momentum, among other factors. Though this is our first ETF to carry $10,000 to over $1 million, there are even more potent ETFs to come. In the end, there's an ETF that can make your valuation over $20 million. So back to our list. At number 2, we have Vanguard S&P 500 Growth ETF. Known by the ticker symbol VOOG, this ETF has a moderate current dividend yield of 1.08%, which increases by 7.83% every year, also known as CAGR. Most importantly, for the long term, this ETF is more focused on growth through stock appreciation, evident from its average annual stock appreciation of 13.32%. If John invests $10,000 in this stock, in 5 years, his investment will be worth $19,823, with an annual dividend of $273 and capital appreciation to that point of $9,823. After 10 years, John's reinvested investment will be worth $40,410. In 20 years, it'll reach $192,667, and in 30 years, the total value will grow to $1,301,686, paying an annual dividend of $113,776, or approximately $9,481 per month. With this ETF, to turn a $10,000 investment into over $1.3 million in value, John had $479,913 of dividends reinvested into the ETF, which compounded over 30 years to over $1.3 million at an annual average return rate. So what is this ETF's strategy? This ETF is designed to give you a piece of the S&P 500 index, which includes 500 of the biggest companies in the U.S. stock market. But what makes VOOG special is that it mainly looks for companies that are expected to grow a lot, especially in the technology sector. Hence the reason 31% of the ETF's investments are in tech companies. Tech stocks in particular have been doing great because they're expected to make a lot of money in the future. Apart from tech, VOOG also invests in consumer and communication companies that have been doing better than the overall stock market. To top it off, this ETF has low expenses with an expense ratio of 0.1%. And it's traded a lot in the stock market, which means it's easy to buy and sell. Last, at number 1, we have Vanguard Information Technology ETF. Known by the ticker symbol MGK, this ETF is a compelling investment option for those looking to gain exposure to the technology sector. In fact, as of the year-to-date YTD performance, it has delivered a strong return of around 34.18%. Before showing you what John can earn from this ETF, let's see why this ETF makes it to the top of John's list. VGT's strategy revolves around tracking the MSCI US Investable Market Information Technology 2550 Index. This means it includes a wide range of U.S. technology companies, irrespective of their size, following the global investment classification standards. The fund has a solid track record dating back more than 22 years and manages over $57 billion in assets, a testament to its stability and credibility. In terms of historical performance, VGT has consistently ranked well compared to its peers over various timeframes. For instance, over a 10-year period, it has delivered an average annual gain of 19.17%, outperforming popular alternatives like XLK, SCHG, and QQQ. This consistency can be attributed to its strong historical returns, with rankings among the top performers in its category. So, how much can John earn from this ETF? This ETF has a current dividend yield of only 0.75%, but don't get fooled by this low yield. It offers an exceptionally high dividend growth rate when compared to other ETFs. In fact, it offers a 10-year CAGR of 14.41%. And most importantly, the fund share has been growing on average by 19.17% every year. Based on this, if John puts $10,000 into this investment, after 5 years it'll be worth $25,171. He'll also receive an annual dividend of $307. All in all, he'll have a capital appreciation of $15,171. Give it 5 more years, and in 10 years, thanks to both higher dividend growth and annual yield, the number starts doubling every 5 years. In 10 years, his reinvested investment will grow to $66,308. In 20 years, it's expected to reach $645,405. And after 30 years, the total value will soar to $23,943,915, paying him an annual dividend of $6,516,715, which translates to roughly $543,059 each month. Transforming a $10,000 investment to over $23 million might sound very unrealistic, but the calculation is completely sound. The thing to remember here is that the original $10,000 isn't solely at work. The reinvested dividends that have been growing at 14.41% each year, backed by the massive 19.17% annual appreciation rate, truly accelerate the investment's growth. This means with his initial investment of $10,000, he has reinvested all of his dividends from each, which if you add them all up, is valued at $15,597,106 in dividends reinvested. These two work together to get him to his valuation of $23,943,915. In this video, we discussed the 6 best Vanguard ETFs to buy and hold forever. But maybe you want to use your investments to pay rent using dividends from the first year. For this, watch our video on top 6 sector ETFs that'll pay your rent, where we show you sector ETFs that can pay your rent from the very first year.